Let's take it straight to the fixed income markets. You've got Dhawal Dalal, Executive Vice President and Head Fixed Income at DSP Blackrock Investment Managers, joining in on the show. Dhawal, you've got the bond yields which seem to be trading higher on the lack of OMO news. What's the trajectory that you're penciling in, and how do you believe they've read into this?
That's right. In fact, you must have seen that the market participants are eagerly awaiting an announcement of an OMO by the RBI for bond yields to take them lower. And that has been the prime reasons why the bond yields have traded lower from the peak of around 885 in the early part of this quarter, and back to all the way to about 8.08 on the new 10-year. I think the RBI's presence is the key for the market participants to have a positive sentiment. In absence of the RBI's presence in the OMOs market, we believe that the bond yields will probably trade on a higher side in a gradual manner.
Right now, Dhawal, we've got a 15,000 crore bond sale on Friday. Today we're on Wednesday. If we don't see an OMO by the end of this week, would you say that the new 10-year could possibly, go to levels of 8.15 plus?
If you look at it, the yield difference between widely traded 9.15 2024 and the new 10-year, the yield gap is as wide as 30 basis points. We believe that this yield gap will gradually turn lower, and I think the yield will probably settle somewhere around 10 to 15 basis points. So over a normal course of time, because of higher supply of the new 10-year, we believe that the new 10-year yield should trade higher than where it is currently.
And Dhawal, if we just talk about the kind of problems, that the liquidity problems that the bond market is being faced with, do you think that you would be cautiously pessimistic?
Well, I am always cautiously optimistic. So we believe that between now and the next credit policy, we have about 75,000 crore worth of supply coming in. At the same time, market participants are eagerly awaiting further announcement on either diesel decontrol price and what impact it will have on inflation. And at the same time, the market participants would like to see the new policies of the new finance minister. So there are lots of ifs and buts, but we believe that market will trade cautiously going forward between now and the next credit policy, only because the inflation could be a bigger problem in case if diesel prices are hiked by more than 10% in the near term.
Right now, Dhawal, to the extent that, we are picking up news that a government panel is looking at the possibility of, addressing the diesel price issue. We will possibly see diesel prices being raised by about a rupee every fortnight, and it's a resultant impact on inflation. Are you worried about the likelihood of interest rates not getting corrected downwards, maybe even in July, maybe even in, in October?
My sense is that the Reserve Bank of India will keenly watch the trajectory of inflation and inflationary pressures. Currently, if you look at the CPI, which is a broad measure of the consumer prices, it's already about 10%. And if the monsoon does not help us in terms of getting adequate precipitation, then you could probably see food prices heading higher further. So in all likelihood, the Reserve Bank of India will carefully watch all the indicators along with the economic data before deciding whether they are likely to cut rates further or not. But at this point of time, I think most of the market participants do not expect the RBI to cut rates in July.